What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and portfolio manager in the mining sector. It's a pleasure to have you back on, John. How are you doing today?
Hey, thanks, Aaron. Everything's good here. How about you?
Great, exciting, busy. And so let's start by telling us what you've been up to since we last spoke. It has been a volatile time, ups and downs. We're seeing a little bit of the market going up now. So let's get your opinion.
Yeah, so our last interview was Q4, and mining prices are up significantly. A lot of the names we mentioned on your show did quite well, but everything has done quite well. If you're looking at the GDXJ kind of holdings, we saw, GDX break through that 28 level that we talked about. Then it broke through 30, which was a major, kind of round number for people. And then, got above 33 after hours, a couple times, which is really encouraging because we need to see the big boys take off, as we've talked about on your show before, like AEM, NEM, all that stuff we talked about at much lower prices has taken off. Now we have to see the mid tiers and the small cap names follow, as we did in the summer of 2020, which I think we're going to get at some point this year.
Yes, looking forward to that. So last time you were on, we talked about the markets and how, there's still a lot of downside potential to come. Fast forward to the recent Fed meeting. I think it was a surprise for all of us, but the markets reacted fairly positively. Can you give us your opinion as to why and how you're feeling?
Sure. Yeah. I mean, we were expecting a quarter point. The Fed watch tool was showing a 97% probability of that. So that wasn't the deal yesterday. It was more what Powell was saying, during the press conference. I wrote down a couple of quotes and I wanted to, just look at my paper here. I usually don't use notes, as you know, but I don't want to misquote Powell. So, I'm just going to read these quotes out to your listeners and you tell me if this sounds dovish or hawkish, right? So quote number one, we see future rate hikes in the near term. Quote number two, managing the risk of doing too little is difficult. Quote number three, it's premature to declare victory. And quote four, we're living in a world of extreme uncertainty. So all of that to me, not cherry picking, this was like bullet, just really hawkish to me. Yet the markets took it the exact opposite way and threw a party, right? So as a pragmatic investor, you have to say to yourself, okay, is this it? Like he's going to pause at the next meeting? That's not what the Fed watch tool is showing you. They're showing you with over a 70% probability that they're going to get another quarter hike in March, which is March 22nd, right? So if the Fed's saying that they have to be data dependent, then that's what we're going to do. We're going to look at non-farm payrolls tomorrow on Fed 3. We're going to look at the next CPI read and judge ourselves as to what the Fed course may be.
Yes, very interesting times that we're in. So, gold and silver has been on a tear in 2023 so far. It's closing in on 2000. We backed off a little bit today. But, where do we go from here and how high could gold potentially go? Let's just paint an extremely bullish case, especially if we break into blue sky territory, because there's not really much, there's no data to go off of when you're past all-time highs.
Exactly, right. So let's say our last interview, we were talking gold in the 1700s, right? And we have said on your show a couple of times, there was a major channel, meaning a range last year of 1750 to 1850, where gold was stuck, right, for months. And then it broke above that channel here going into 2023. Very bullish. But then what's more bullish, in my view, Aaron, is the closes on the weekly, right? So if you look at the last 3 weeks, the last 3 Fridays have all closed above 1900 an ounce, and we're trading around 1912 right now. Anything's possible tomorrow, but to me, if it's even close to 1900, I don't think that's a bad thing. I think 4 weeks in a row to start January into February off of 1900 plus gold. I don't think many analysts, including myself, had that in the cards this early in the year. So I use that as a positive backdrop for how I invest, right? When I look at gold stocks, I mean, the margins have increased, correct? Since our last show, if you're pulling it out of the ground at 1100, 1200 an ounce, well, at 1900, it's a hell of a lot better than at 1625, right? So
yeah, for sure. They're definitely generating a lot more cash. So we'll see what happens with that. So what are your top picks in the market right now? Has anything changed? Any new companies?
So we talked on the last show. I'm trying to remember here in the silver space. We talked aftermath silver, which is actually pretty flat from where we mentioned it.
Mhm.
It's around 20 and a half US. You know, I know Michael Williams very well as you do, and
Yep.
you know I think that Berenguia is a potential monster project, and you know behind that they have another one as well. So I mean, you know, when you look at two possible open pit silver projects, not one, you know, in the same company with the ability to grow, I think there's a lot of opportunity there. We're going to see some news flow from them that they've publicly telegraphed here by quarter end as well. So there's a catalyst. I would say also in the gold space, you know, gold, silver. I've mentioned golden minerals on your program. We mentioned it around 23. We mentioned it at 26. It's now at 28 and a half. It hit 32 and change here just recently, like a week ago. So I think, you know, they're going to have some news in February, March, because they've had very little news in January, and they're working on multiple projects. One of the things that I like, and you notice it in all of my holdings, is that I have zero positions in anything that has just one project generally,
Mm.
unless it's a trade or something, or it's just a fantastic project, right? Like it's got to be, you know, top tier, you know, potential or producing, you know, so that there's a reason for me to do that. Because with one project, you really are taking a lot of risk, I think. And you've asked me before on the show, Aaron, you know, what do I look for? It's like I'm looking for something like Golden Minerals where they have 7, 8 different things going on, of which 4 are near term viable, right? So it's like if they mess up over here, or if there's political unrest that you and I can't control over here, they've got this going on, and I'm going to be okay as an investor, right? You know, in the copper space, we've talked about a bunch of things in your sector. Interestingly, Sprott just announced a copper junior ETF. Literally today, the press release went
Mm.
out, so that's encouraging, right? Because if you look at COPX, that big cap copper ETF has
Mhm.
killed over a number of weeks and months now. So I think, you know, 4N mining, a bunch of these names that I track are in that COPJ is the ticker. So we'll see how that does. But, you know, there's one that I've been following and a lot of people, you know me for, which is Copper Lake. We found that at a penny and a half 2 years ago. It's trading at 7 cents US now, but it hit 12 in January.
Wow.
So it hit 12, you know, Aaron, I think on the idea that the drill results would be coming sooner than expected. They've had some delays there, but it's just, you know, weather related or lab related. It's nothing, you know, that I have to worry about as an investor. They're in a great jurisdiction with a great geo and Don Hoy. So I'm still long the stock, and believe it's, you know, very prospective up there in the Marshall Lake district. Um, Thinking outside, oh yeah, uranium we haven't talked about. So, you know, you and I had the
Mm.
opportunity to talk to Rick Mazer, the CEO, in Vancouver's VRIC conference, which I thought was pretty well attended. And Rick and I spent about an hour and a half, you know, going through the various projects they have in the uranium space. But people forget that they also have a copper project that, you know, was joint ventured with Rio, and is still very viable. I think, you know, with copper prices rising, you know, close to that 450 a pound level. But the uranium project I'm most excited about is not the one that most people buy the stock for. You know, they staked a bunch of claims February 1st of last year, so almost a year ago, and basically had no news flow on those since that February 1st news release. However, they're now set to drill, you know, in Q2 probably a bunch of those targets. And Rick is extremely excited because he staked them from Cameco, which is symbol CCJ. So, you know, when you look at Forum at 8 cents US, the ticker's FDCFF. I think there's a lot of upside there. You met Rick. I mean, what do you think about him and his experience and the opportunity?
Yeah, lots of experience, like you mentioned, a former Cameco project, so that's very promising, and they've already put money into it, as well as
Mhm.
a new district, you could say. So I think that's pretty cool. And yeah, with the uranium bull market ongoing, I think that it does have lots of potential. So I'm interested in the company as well.
Great. So, you know, in the PGM space, when you look at palladium, nickel, what have you, one has had news since our last taping, and that was Stillwater Critical Minerals, which is PGE in Canada, PGEZF in the States. I attended a lunch of theirs 3 days ago, and there's some heavy hitters in the room. Brian London was there, Adrian Day was there, a couple other portfolio managers, both in the U.S. and outside the U.S., and newsletter writers as well, like Byron King. So, I was very impressed with who owns the stock, right? Sometimes you don't see that from the website, but the resource estimate that they came out with was 62% greater than the last one. Just fantastic values and things like palladium, nickel, rhodium, et cetera. So, really like that project in Montana.
Definitely. No, those are some very interesting companies, and some, we've gotten to know very well. So I like those picks. So what are some of the key factors you look for when selecting a mining company? Like when you're doing your due diligence, what are some of the key things that you're looking for?
Sure. So of the companies I just mentioned, Mike Rowley at Stillwater, CEO Terry McDonald at Copper Lake, Warren Rain over at Golden Minerals, all these guys get back to me within 24 hours, and if they can't, they're going to say, hey, John, I'm traveling to Mexico or Argentina or whatever, and I can't, let me get back to you in 2 days or something. But the communication lines are always open. And, that's always a plus for me, Aaron, because I've got to relay information to people like you and my clients, right? And so, like, if I don't see something coming, if I've been told we're going to have news by January, on a drill project or something, because that's what they've telegraphed through their reporting, then if I don't see any news by January 31st, I'm wondering what's up, right? We've all been there. And so having those lines of communication open so that I can clarify anything so that clients don't make the mistake of selling too early, I think that's very useful. And a lot of people know me for, banging the phone and getting in touch with CEOs and keeping those lines of communication open. Another thing is jurisdiction. Last year was a really bad year for headline news in places that we weren't expecting. You saw, Chile really get ugly at one point. Peru actually, I think, got better towards the end of the year with the news on Castillo. Colombia was in the news. Nicaragua was in the news with some surprises. So, it's just constantly something you have to watch. And so for that reason, we've rotated some money away from some problematic areas, unless we have, again, that open line of communication. So we know that that particular province within that, country is safer than maybe say others. We're going to gravitate towards safer places because, we want the opportunity to win here. We don't want to get all the way to the finish line after being loyal to a junior 2 or 3 years down the road, and then they've got, problems with the locals or a roadblock or something that we could have maybe foreseen by doing more due diligence.
Definitely some good things to look for. So how does your program allow investors to achieve higher than average returns? Why should someone look at Feneck Consulting? Or you can talk a little bit more about it too.
Yeah, sure. So we offer a couple of different services. The most popular are just real-time macro updates. So, when the Fed came out yesterday, we put something out within 60 seconds of the Fed announcement. We're not always that quick, but, on big days like GDP, non-farm payrolls, CPI, it's nice to be guided by someone that has not only a background in that, but also, has money at stake like you do, right? So like I run a mining portfolio, I run an energy portfolio. I'm looking at these markets every single day. So if I see something unusual, I want to bring it to people's attention. Like yesterday I said, this is seems somewhat hawkish to me, but the markets seem to love it. So, you've got to respect the tape, right? And so that's, how we reported that, and hopefully people capitalized on that. And secondly, we offer a newsletter. So we started that in July of 21. So it's been out a year and a half. And that covers all commodities, Aaron. So everything from natural gas to clean energy to the obvious in gold and silver or copper or something like that. So we're proud of that. Our format is different than most in that we do a few pages per issue. We don't do 30 pages. We don't do deep dives. we think that, you know, we charge less as well. So I mean, we're not trying to get the most out of a client. We'll try to work within their budget. And you know, those are the primary things that we offer. But really, you know, we're proud of our track record, right? We started it 7 years ago on January 1st, and we've done quite well versus the peer group. And you know, in a year like last year, we're not proud that we were down close to 20%, but I think we're really well positioned this year, and we're seeing, you know, a 10% plus January here. So, you know, we're really excited about the prospects for this year.
Yes, it's been a great start to the year. So finally, do you have any advice for our younger viewers during these tough market conditions? Because now that the market's starting to rally, especially risk on stocks, you know, are the young people going to make the same mistakes, or what should they be doing? What's your advice for that?
Yeah. So to me, this feels like coming out of 99 into 2000 in technology. Like we've had a great January for technology in terms of performance, right? And I'm mentioning that sector, Aaron, because it's so prominent, right, within the Nasdaq or the S&P. Everyone that owns the broad market owns tech, whether they like it or not, right? But when you look at how many layoffs we've seen in tech, I mean, the headlines are terrible to me. I mean, it's 68,000 jobs lost in technology alone in 1 month. So I don't have the same, you know, bullish outlook for tech that most people have right now. Sure, you could see another couple of weeks of a rally here, but you know, I'm hearing a lot of people say, "Oh, we're gonna see a rally right into May like we usually do," and then it's, you know, sell in May and go away. I don't think you're gonna have that opportunity. The markets are moving way too fast, and you're going to have to deal with the algorithmic nature of things as an investor. So my 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 advice, I guess you would say, to your listeners is the same as it always is, you know, try to partner with someone like myself, or you know, someone that is doing it 12 hours a day, that really cares and has, you know, some skin in the game, right? But also don't get greedy, you know, take some profits.
Yes, I agree, John. So we'll have to have you back on to follow up with that and see how the prediction went, because I always like to check back on our previous interviews. But it was a pleasure having you, and we'll definitely be having you back on at a later date, John.
Appreciate it, Aaron. Have a good one.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.